Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a Chief Executive Officer of Treasury Consulting LLP, and this time we are covering our video on technical analysis of Japanese yen. As you very well understand that lot of walls is happening in the Japanese yen, and Japanese yen is turning out to be a contra currency, which is irrespective of the fact that it is scheduled to move to 95, but somehow it is trading at 105 today. We are going to cover this video, we are going to cover this logic right now. We all understand that Japanese debt to GDP ratio is approximately 380%, which is very high. And most unfortunate fact which is happening with the Japanese is that the people who used to participate in the bonds funding, now they are not participating, and majority of the holdings of the Japanese are now going outside Japan. So why Tokyo is still able to maintain its status, which is irrespective of the debt to GDP ratio of 380, is because majority of the debt has been held by the people who are within the country. But unfortunately, this is changing, and now the country is moving towards, now the debt is getting held up by the people those who are outside the country. What I meant to say that people within the Tokyo are not interested to take that debt, and this would certainly take a few course. This would certainly take the it would certainly change the course of the Japanese yen. Now the chart you have right up front you, this is a chart of USD to JPY of the last 3 years. And in this, what we are going to do, we are going to make a technical analysis of the Japanese yen, which is currently trading at approximately 105.22. Now in the last 3 years, which is effectively, you will take this November 2014. Now if you look at this chart, you will get to know here it was a positive sentiment and things went up, 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 up. Now here it was a positive sentiment and things went up, up, up. Now if you look at here, it was just like movement up, movement up, movement up. Now if you look, now if you, this is movement up, movement up, movement up. The same thing would have happened here in roughly August 2015. It is movement up, movement up, movement up, and this. Now a lot of head and shoulders positions were maintained during this period, and one of the head and shoulders positions which were maintained is this. You have this head, you to have one shoulder and another shoulder. You have this head, one shoulder, another shoulder. You have this head, you have one shoulder, you have another shoulder. From where Japanese took fall, which is approximately February 2016. And why? The answer is pretty simple. Because Central Bank of Tokyo left with no option else to go ahead with a huge amount of quantitative easing, and because of this the markets fall. As simple as that. And markets, it was the place when Japanese yen was approximately 122, and now it went to 105. Treasury Consulting LLP, I was then working as a corporate treasurer for EXL. Then I predicted that it would move down to 95 sometime very soon, and it has touched 98 something. Now from here it started falling, and from here it went to 98. Now you can see here, this was the falling point that happened, which was roughly 123, and this is where it ended, which was roughly 99. Now it is again going up. If you look at the charts of recent chart, it is again going up. Now why it is going up? Because of the dollar strength. You know that the dollar index is trading approximately 100 and approximately 99 today, and 100 in books seems to be very good, but this technically not very good for people in US, because this hurt the export competitiveness of US economy. But I don't think that now Federal Reserve left with any option or any ammunition to reduce the dollar index from 99, which is currently trading, to a well suitable level of 97 or 98. So what we are going to do, let us cover let us cover this using a technique called technical and analysis technique called Bollinger Bands and MACD, or sorry, RSI. Now this is right Bollinger Bands for you, right in front of your screen. Give me just 1 minute. This taking, yeah. This is right in front of you. This is plus minus 2 standard deviation. what we are going to do, we are going to change this standard deviation. We are going to change this to 1.5, and we are going to change this to minus 1.5 to see whether this spot lies within or not. And you can clearly see that now I have not changed this yet, but I have changed from minus 2 plus minus 2 to my plus minus 1.5, and you can see that the middle level line is changing its pace and the lower level line is coming down. So now what I'm going to do, I will increase this to 2.5, and here I will do it to 2, and now I say, and I'll do on the high number 1. Now you will get to know that if you look at this chart, Bollinger Bands, you will get to know that when it is going up, it is covering 2 to 1.5. When it is going down, 2.5 to 2. When it is going down, it is not doing that. So what I do, let me change this. Let me change this weight. It is 2.5 to minus 2.5. Sorry, minus 2.5. And now if you see that it covers the entire space, it means although the volatility which is showing is very high, it means the volatility of the Japanese yen is between plus minus 2 standard deviation, which is right. So now finally from the Bollinger Bands, we will come to know that yes, the walls or the area of the Bollinger Bands is plus minus 2 walls, which is the right answer and which is the right justification also. So now what I am going to do, I will reduce this to plus minus 2 walls. This is plus 2 walls. This is minus 2 walls. And from here we will get to know that it is going good. But if we do plus minus 2 walls, then there are two problems with this Bollinger Band. Number one problem would be that the lower line, now this is the upper line which you see here. Here it is a middle line which you cannot see, and the lower line is showing much more volatility which can be curtailed. So the lower side is facing much facing much volatility. Then the lower moving average is little bit outside the purview of the chart. On the other hand, the medium is touching the higher at some places. Now what we are going to cover, that there is a big volatility here, this section. We are going to take the use of another technique which is known as relative strength index. Which is known as relative strength index. Now if you look at this relative strength index, which is 3070, and right now the relative strength index of the Japanese yen is trading at 46, approximately 47, it clearly suggests that it is neither a buy signal but nor a sell signal. Because if it is 30, then it is oversold, then you should buy. If it is 70, then it is overbought, you should sell, right? But as per the technical analysis, it is showing that currently RSI is trading approximately 48 levels, so you should not sell. So neither it is a buy call, neither it is a sell call. But our personal view is that Japanese yen is strictly a sell call now, not now 105.24, which is currently trading. It is approximately a sell call nearby 106.5 something. But again, you need to maintain your stop loss positions. Why I am saying stop loss position? Because currently markets are going fully emotional, not fundamental. So technically speaking, Japanese yen should have decreased to 95, because economy is going doldrum. And if you carefully see today Bloomberg TV covered that. Japanese yen is facing the prices have fallen, so the inflation have fallen, and Bank of Japan is clearly saying that they are doing the huge quantitative easing only for plus minus 2. So as per this technical analysis, this is not a buy call and not a sell call Japanese yen, but in our personal view, which is strategy consulting LLP view, we estimate that Japanese yen is seriously a sell call, approximately 106.50, from where we need to see the sentiment also, how sentiment is going. But one thing which we are very sure, that all the economic information which is coming from Tokyo is not matching with what they are saying, especially to run their quantitative easing program. So this was for the today, to introduce you about Japanese yen chart, and is to let you know that how exactly this Japanese yen is moving, and what is our view. Our view towards trader, those who are trading Japanese yen, is that if they have Japanese yen is their portfolio, then they should maintain a sell target in 106.5. And if and sitting today there is no buy and no sell, but yes, you should maintain a stop loss of 104.8. so don't sell right now, but if it breaks 104.8, then you should sell. And similarly at 106.3, you need to sell your receivable. This was the video from our side on from Strategy Consulting LLP, which covers technical analysis of the Japanese yen. And we strongly believe that as the dollar index is moving towards 100, the valuation of the Tokyo will rise artificially. It might touch 106 or 106 and a half, but the I would say internally Tokyo is not as strong as it should be. But if dollar index turn to 98 or like this, then I think they might go ahead. They might touch 106 as well. So we thank you very much, and you are always welcome to connect with us at rahul.magan@treasuryconsulting.in, and my number is 9899242978. Thank you.